Considerations with insurance is that premiums are also deductible, tax deductible outside of superannuation. So you can, in some instances, it is good to hold income protection cover outside of super. Sometimes it's good to combine it as well. You can do some outside of super and some inside of super. Within Christian Super, there is a 2-year payment period. So if you were ill and unable to work and it's longer than 2 years, then Christian Super will pay that 75% of your salary for 2 years. Outside of superannuation, that can be up to age 65 or 60 or even 70 in some cases. Within super, it's an indemnity value, which means it depends on what your earnings have been in the last little while. Outside of superannuation, you can get agreed value, so just little differences there. With Christian Super, there's a fixed waiting period of 60 days. Outside of superannuation, there's variability, more flexibility in that waiting period. The waiting period is how long you need to be ill before they'll start paying 75% of your salary to you, or up to 75% of your salary. If you are under a certain age, if you're under your preservation age and there's a death payment, sometimes the financial non-dependents can be taxed 31.5% of those death payments. So sometimes you need to have a little bit higher level of death cover in your superannuation as opposed to what you would be out of your superannuation. So you just need to factor that in. And this has changed in that you also need to understand that total permanent disability insurance within your superannuation needs to be in any occupation. Outside of superannuation, it can be your own occupation as well. So there are some different rules there as well. But superannuation is a great way to get cost-effective insurance cover without affecting your cash flow.